So next, let's dive into what we're actually going to look at to get you qualified. The three main components of a mortgage are income, assets, and credit. So we'll start with income. So for the income component, banks want to see stability and likelihood of continuance. So what that means in layman's terms, they want to see that you've been at the same job or you've been employed for the past 2 years and that you're likely going to stay employed. Now, there's tons of exemptions for that if you were in school or taking care of a family member or had a medical issue that prevented you from doing that. We can document all of that and submit it. If you do have the 2 years of history, typically you can take whatever income is your current base pay and use that for your future income. Now, if you have commission income or bonus or any sort of variable income, we'll typically look at an average of that. But again, tons of exceptions, tons of workarounds. The most important thing is giving us a call so that we can get you qualified for what your specific scenario is. The next thing that's critical in reviewing your application is your credit. What banks typically look for on a credit score is something above a 640. There are programs that do dip below that, but they always come with enhanced guidelines, additional restrictions, or more money down required. If you don't have a 640 FICO, don't stress. We have seen that before, and we can help you out and give you all the tools and tricks to get your credit up. Behind your credit score, the most important thing is having 3 active trade lines. So that's either credit cards, a car payment, student loans, another mortgage, something that shows that you have a history of paying things back on time. Now, a lot of people are on authorized user accounts. Those do not count as your own trade line. They will help you build credit, but for a lender, we want to see you having your own established trade lines. And the likelihood of you repaying is based on us looking at those trade lines and seeing that you've made payments on time successfully for over 12 months. After looking at your income and credit, the next thing that the bank's going to look at is your assets. So that's your checking and savings account, CDs, money market accounts, stocks, retirements, basically anywhere that you have cash or stocks or money to put towards this property. Now, we typically are going to want to see 2 months of history of your bank statements or retirement or stock accounts. However, if you're getting a gift and the program does not require reserves, you can have a loan go through without showing any asset statements. It's very rare that that happens, but if you don't have any funds and you have a relative or a family member that is going to give you a gift, that is a possibility. There is also ways to get gifts of equity. So again, every situation with lending is different. So what's important is that you give me a call, shoot me a DM, or book a time in so that way I can go over what's specific to you, what you do qualify for, and what that program allows.